London, Reuters, buoyant commodity prices alongside a pullback in U.S. bond yields and the dollar propelled world stocks to new record highs on Thursday, signaling the rally would likely extend into 2018. MSCI's World Equity Index, MIWDOOOOPUS, which tracks shares in 47 countries, has risen about 22% this year and looks set for a record 14th straight month of gains. U.S. stock futures too rose, indicating a stronger day ahead on Wall Street ESc1 YMC1 and QC1. This year's equity rally has been led by the bumper performance in Asia, which is on track for its best year since 2009, with MSCI's index of Asia-Pacific shares outside Japan, MIAPJOOOOPUS, approaching late 2007 highs. Equity markets have fed off this year's recovery in world trade and economic growth, which have in turn lifted company earnings and commodity prices, with copper futures at new 4-year highs CMCU3 for an annual gain of over 30%. Oil prices, meanwhile, are near 2-1/2-year highs LCOC1 and gold climbed to a 1-month top SUBCRIBE. Traders anticipate the equity rally continuing into next year, especially if U.S. tax cuts further boost growth in the world's largest economy. Commodities are driving trade in the final days of 2017, analysts at London Capital Group said in a note. Copper has rallied 25% since the beginning of June, and with this in mind, Dr. Copper is telling us we could be in for a strong 2018, they added, referring to the perception of copper as a key barometer of economic growth. Another tailwind for world stocks is the fact that U.S. tax cuts, which will lead to significantly higher borrowing in coming years, have not so far translated into higher borrowing costs. In fact, U.S. 10-year Treasury yields have retreated after briefly last week breaking above the key 2.50% level, falling as much as 7 basis points on Wednesday. 2-year yields too are off 9-year highs. US 10YT equals RR. US 2YT equals RR after showed U.S. consumer confidence tumbling from 17-year highs. Brokerage FXTM noted that 10-year yields had reversed almost half the gains they had made since mid-December. The dollar index, DXY, skidded some 0.3% against a basket of currencies, to a near 1-month lows. The dollar bears are getting their last licks in for 2017, perhaps foreshadowing of things to come in 2018, said Stephen Innes, head of Asia-Pacific trading at OANDA. With the dollar on the back foot and commodities flying, currencies of commodity exporting countries such as Canada, Australia, New Zealand and South Africa AUD equals D4, New Zealand NZD equals D4, CAD equals D3, ZAR equals D3 hit multi-week highs. Emerging equities surged almost 1% to approach 1-month highs, MSCI EF. The index is up 34% this year. However, Bitcoin BTC equals BTSP, the digital currency, which many would consider one of the most risky bets out there, failed to benefit from the risk-on mood. It fell more than 10% to under $14,000. Bitcoin has declined from record highs of nearly $20,000 earlier this year but is still up about 39% this month and has gained 5,000% in 2017. Additional reporting by Swati Pandey in Sydney, Abhinav Ramnarayan and Kit Rees in London, editing by William McLeaner. Standards. The Thomson Reuters Trust Principles.